Have you inherited a property that you're thinking about selling and you want to make sure you don't make any mistakes and you get every penny out of that house sale? Well, today I'm going to talk about 2 ways a lot of people lose big money when they're selling an inherited property, and they didn't even know they could avoid these 2 things. Hi, I'm Annie Baker with Next Chapter Real Estate. Welcome to my channel where I talk all things selling a house in the Bay Area, specifically Silicon Valley area of Northern California. I predominantly help people when they are selling inherited properties or downsizing a senior or downsizing themselves and moving out of the area. So today what I want to talk about are 2 things that I see a lot of people when they inherit a property, they don't realize they need to pay attention to 2 things, or they could lose, I'm talking upwards of $30,000, maybe even more depending. Okay, number 1 pitfall to avoid when you're selling an inherited property is not recognizing every day matters, from the day that your parent or family member or loved one, whoever you inherit this property from, not paying attention to how soon you sell that house. Now, I get it. You have a lot of emotions going on, and sometimes you need time to decide. I get it. The problem with taking too long in the Bay Area is every day from the passing of the loved one, the property taxes get reassessed at the new value of that house. So for example, let's say you have a loved one that died, on June 1st, and they bought the house 40 years ago for $60,000. So they've been paying property taxes based on that value, which is peanuts and good for them. And so starting June 2nd, at some point, the tax assessor's office will reevaluate and reassess that property at a more reasonable value for today's standards. So let's say that house is worth now $2 million, and it will be reassessed. It's never assessed at the full, value. So probably around $1.5 million, and you're getting just over like 1.25% property taxes. They slightly vary depending on what city or what county you're in this whole Bay Area. But let's just go with 1%. So $2 million assessed at $1.5 million. So now you're looking at $15,000 a year in property taxes from probably they were paying maybe $1,000 or I'm sure under $5,000 a year. They got reassessed, I'm sure, over the years a little bit, but that's a significant difference. And it'll probably be a little bit more than that because I'm trying to keep my numbers simple and easy here at 1%. So I mean $15,000. So every day starting June 2nd until, if you don't sell the house until, let's say, October 10th, all those days it will be reassessed at that higher value. So in this case, that could be around $8,000 that you would owe. So be really mindful about, okay, I better pay attention to how much time I take. You're having to obviously upkeep the house and pay the existing property taxes. Maybe there's a mortgage. So you're having to upkeep all those bills anyway. And now your property taxes are going to be a big bill. Okay, number 2, other way that you can accrue a lot of extra debts or fees is the reassessed value for your capital gains taxes. So let's just stick with that same example that your loved one passes June 1st. So starting June 2nd, technically the value has gone up to $1.5 million. And let's say you don't sell the house for a good year. Well, in our neck of the woods, a lot of times houses can appreciate upwards of 10% or more, and especially depending on what is done to the house while you're holding the property. But now, what if it's $1.6 million you're going to sell? $2,000 that you will show up as income for you on your taxes. So, hopefully you have a good accountant and they can help you with this. But that's another really significant piece of information to recognize. Oftentimes, if you sell within the first 6 months, the IRS doesn't kind of go after people too much. They sort of look at that as like the house is probably the same value as when the person passed. So a lot of people have it in their mind that they have to sell within 6 months. In fact, I just had someone I met with, in their trust, their parents said they had to sell within 6 months of their passing. So someone gave that parent some advice that was good advice to sell quickly, and so again, I know there's so many emotional things going on. It's not that easy, getting rid of all your loved ones' belongings can be really emotional and taxing. But if you know you're gonna sell, get some help and let's get the process going quickly for you. Here, another example, I had a client just recently, his mother passed in like mid-November of 2023. And he got right on it. We met within 2 weeks. He knew he was gonna sell. He knew it was gonna be hard for him, but he knew, well, he was an accountant, so he probably knew the tax issues and property tax issues. So we got on it, helped him do a few minor, updates to the house, and we closed around the 3rd week in January. He just called, so it's now June 2024. He just called and said that he got a property tax assessment, supplemental tax bill of $2,000 in that short amount of time. That's how much he'd pay extra in property taxes, because they usually don't assess until well after the house is closed and it's months later. So yeah, that's money out of your pocket. So avoid those 2 pitfalls when you're thinking about selling. If you know you're going to sell, get on it. Get as much help as you can and just get the house on the market. So if you have any other questions, if you've inherited a property or thinking about downsizing yourself or downsizing a loved one, I am always here to help you. I love talking to people. I get calls from all over the United States, people needing some help. I'm here for you. So until next time, have a great one.